Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back on the show.
John, you last talked about ASX-listed de Grey mining on Discovery Watch in December 2017 when Novo Pilbara conglomerate gold story was still hot. Since then, it's been downhill for de Grey, but a couple weeks ago, the stock rocketed from a nickel to over 20 cents today. That might be a big deal for a typical Canadian-listed junior with less than 100 million shares issued, but de Grey has just over 1 billion shares issued. What's going on there?
Well, Jim, you're right. A 400% stock price move on a TSX Venture listing that's wiped out minority shareholders by doing a brutal rollback, and then it's got tight structure. Yeah, ramping from 5 cents to 20 cents, no big deal. But when you go from a $50 million valuation to $200 million valuation with 1 billion shares out, all of them free trading, that is a big deal. And something important has happened to de Grey, but it is not what you would have expected. We started talking about them in late 2017 because they had a very large land package in the northern part of the Pilbara where Quentin Hemi and his Novo Resources had got us all very excited with the idea that the Pilbara might have the equivalent of the South Africa's Witwatersrand 1.6 billion ounce treasure trove of gold in these conglomerate reefs. And we were calling it Wits 2.0, and this, we hoped, would kick off a massive global exploration boom. And what had happened was Quentin was busy with Novo in the eastern part of the Pilbara with the what was it called again? The Beaton's Creek project, which has sort of finer grained conglomerate-style gold, similar to what's in South Africa. And he's a proponent of this precipitation theory that this Witwatersrand-style gold formed about 3 to 2.8 billion years ago when the cyanobacteria, that blue-green algae, the first form of life, showed up and started creating oxygen through photosynthesis, and seawater at that time had an awful lot more gold in it than it dissolved in it than it did today. So within these mats of algae, gold would start precipitating out and forming nuggets, and he felt that the Pilbara, which is similar age to the whole the craton that holds the Witwatersrand basin, should have similar potential. And then he heard right around second quarter of 2017 that way in the northern part of the Pilbara, where fossickers, these are amateurs with metal detectors, they've been finding these sort of up to half-inch flattish gold nuggets for ages in the gravels in that part. Nobody ever knew where they came from. Everybody had given up looking a long time ago. But there were reports that a company called Artemis Resources had found these types of nuggets in bedrock. In fact, a conglomerate unit that sits just above the ancient Archean basement and the younger Mount Roe basalts that had flooded that area and basically covered everything, preserving these, 1 to 10 meter thick conglomerate beds. And so he got over there, realized that what this was, thought, wow, given the reports of these nuggets over hundreds of kilometers, we actually have a similar situation as the Witwatersrand, except the nuggets are much bigger. At half-inch wide, that's considerably bigger than the thickness of a typical nugget in the Witwatersrand basis, which is the thickness of a hair. And the only reason they call it conglomerate is when you look under the microscope, you can see that it's rounded like it's been rolled in an alluvial environment. So Novo staked a huge land position, what they call the Karatha block, and then optioned all the other land positions in the area. Basically anywhere where the edge of the Mount Roe sort of transitioned into the barren basement rocks. And we had that huge boom, but that whole play kind of ground to a halt in 2018 as we realized that small-scale bulk sampling, core drilling, none of that was very effective in quantifying the nugget effect. And Novo eventually concluded the only way to figure out what this is all about and maybe develop a localized strategy for measuring the gold content of these conglomerates is to take 100,000 ton bulk sample. But the problem in Australia is to get a permit for such a large bulk sample, you need to have a JORC resource estimate demonstrating economic potential. Well, the problem was they couldn't get a JORC estimate, so it was a catch-22 situation. And so Novo's been busy lobbying the government for a modification to the rules so they can go and do this huge bulk sample. Meanwhile, they've gone off into the Egina area where they are chasing the lag deposits, which are these original conglomerate beds under the Mount Roe that have been eroded away and then, disaggregated, and then all the debris rolled around, and hopefully the gold sorted into these marine terrace deposits where they are now doing work in terms of traditional alluvial-style operation. Now, de Grey got our attention because they had already owned something called the Turner River Project, which was a fairly lengthy project, about 50, 60 kilometers, covering the part of the Pilbara where the older basement was exposed, where there wasn't really any of this Mount Roe basalt there. And of course, the Mount Roe basalt is not seen as interesting for anything. They were after these shear controlled gold deposits within the older Archean basement. And they had also optioned a project called the Indy project from an Asian group, which basically doubled the strike of all this to the west. And it was in the western part of that there were these remnant islands of Mount Roe spilling out from beneath was the conglomerate gold, and one of them in particular, Loudon's Patch, had a history of all these gold nuggets being found. So although most of de Grey's land position was on the older basement, which had no potential for this conglomerate-style gold, patches of the project did have potential for that, and it got swept up into that whole Pilbara Gold Wits 2.0 story. And in fact, they even renamed the project the Pilbara Gold Project. But of course, the Loudon's Patch has the same problem as Novo has with places like Comet Well. There's, up to 100 meters of garbage rock on top of these 1 to 10 meter thick conglomerate beds. And how do you justify removing all of that to see if what's in the middle of this conglomerate bed is the same as what's on the edges? So that stock slowly ground back from its sort of 15, 20 cents it had reached, and ended up back at a nickel. And last summer, it became due time to purchase the Indy project, and the price tag was $15 million. So they did a huge rights offering at a nickel, raised $19 million Australian from that, issued about 500 million shares, plus did a private placement, and it was all guaranteed by a brokerage firm called Potter Bell Securities in Australia, and paid off this acquisition cost and consolidated the project, renamed it the Malina project, and then initiated a strategy of grid drilling with a light air core rig, which can only go down maybe 70 meters, and they were basically tracking along these regional shears that track east and west, and they were looking for a mineralization through sand cover, so it's in essence blind drilling. And the project was sort of touted as, okay, we have 5 distinct deposits scattered over this 120 to 150 kilometer strike of this whole project. They have 1.7 million ounces in the ground at various resource categories, ranging from 1.5 to 2.2 grams per ton. And the whole story was, well, we're sort of like a gold optionality play. We can put these into production and that. But they also had this exploration initiative. And ironically, in the western part of what is the Turner River Project, which is what they had before they optioned the Indy project, there was one prospect called Hemi, where in early December they put out a press release which had a pretty interesting interval in it. It was like a 43 meters of 5 or 3.9 grams, and within it was 12 meters of 9 grams per ton. Now, the market pretty much ignored it. The stock stayed in its 4.5 cents to 5 cent range. But then on February 6th, they put out another release, and this was from another line of these air core hills, and these air core lines are about sort of 250, 500 meters apart that they drilled them. They just drilled these shallow angled holes, just basically to, prospecting with a drill bit to map the basement. And this next section, which was 640 meters to the southwest, it had similar high-grade intervals and widths. And that suddenly told the market, okay, there is something big going on. And what it is, it's old Archean sediments that have been intruded by other rocks. And what they're finding is very fine, disseminated sulfide mineralization with which the gold is associated, occurring in both the sediments and the intrusive rocks, with very little evidence of quartz veining, which might be blamed for this high-grade nature. And the market said, oh boy, this is something completely different for this part of the Pilbara, where, what we've seen so far from the gray mining, it's not very interesting. It's not high grade. It doesn't have huge size potential. So the stock took off, traded 125 million shares, doubled to a dime, on that news. And then on February 11th, they put out more news, more results, going back to the original section, showing that yes, it goes down. It's even down to at least 70 meters. And then, of course, Cyclone Damien hit that area. And when cyclones hit the Pilbara, not everything stops. You have huge floods and very high winds. And now they're going to go back in there with an RC rig and a diamond core rig, so that they can start figuring out the geometry of the system. But from what we can see so far is there is a substantial mineralized presence in this area. It's an area, the Hemi area is one where there has never been anything drilled. They've got a couple lines of additional air core holes, both 250 meters to the southwest and 250 meters to the northeast, where everything is pending. But this seems to be a significant new discovery for this part of the Pilbara in Australia. And last time I talked to Quentin about his precipitation theory, he'd sort of come to the view that the precipitation theory may not really apply to this large nuggety gold in the Pilbara. He thinks that it maybe came from more traditional hydrothermal vein systems that came up and got eroded, and these somehow, in some peculiar way, ended up in these large nuggets. But there's never been really a big source of, well, where's the source of this gold? And what the gray may have shown is that decent grade gold is present in the Archean basement of the Pilbara, and we just haven't had the luck of looking at it with anywhere the degree of intensity that's happened in the Kalgoorlie area, which is in the Yilgarn Craton, in the southern part of Western Australia. So the Malina project of the Grey, this huge land position there, has now taken a whole new stance in terms of potential for delivering a multi-million ounce gold system at a grade that gets the market's attention. So yes, this is definitely something to revive for Discovery Watch. It is the same project, but it's no longer the conglomerate gold. It is Archean basement hosted shear associated gold mineralization.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, Azimut exploration jumped this week. Are there any new developments at the Elmer gold discovery in Quebec?
Well, there are no developments related to the project fundamentals at Elmer, but what the company did announce that it has raised $6 million at $2.45 with flow-through benefits with a single strategic investor. And the market has been holding back on Azimut exploration because it says, okay, you have a significant discovery at Elmer. It tripled your stock price from 50 cents to a $1.40, 50 level, but you need to raise some serious money to really drill this off. And just as some background, all we know so far about the Elmer project is that a 200-meter segment of what they call the Pat 1 prospect, which is an exposed outcropping portion of the property within a 7-kilometer interpreted shear structure. When they drilled it last November, December, and reported the results in January, it was demonstrated that there's very high-grade mineralization of a style that we normally associate with the Abitibi Greenstone Belt-related gold systems, and so different from what we've seen so far in the James Bay area with the Eleanor deposit and the Eau Claire deposit and the Sakami deposit of Quebec precious metals. So the market has been quite excited about the potential for what we see here within, only 100 meters deep. And again, there's a lot of analogies here, similarities with what's happening with the Gray and its Malina project in Western Australia. Here we still just see a small segment, and the question is, where is it going to go? Now, they have conducted an IP survey. An IP survey delivers resistivity data and chargeability data. And the chargeability data is indicative of disseminated sulfides, not massive sulfides. They do know that the area that they drilled where they got the high-grade gold mineralization does have sulfides in it, so they pretty much know that it lights up. The question is, within this 700-meter by 2,100-meter corridor that they decided to do the IP survey on, that straddles what they see as this shear structure, how does the IP behave? And they just finished the survey on Sunday. Took a little longer than expected because they decided to extend it to 2,500 meters. Processing is underway. They hope to have results ahead of next weekend before the PDAC, at the very latest, hopefully during PDAC, so that they can show us how does the IP look over the Pat 1 prospect itself that was drilled, and how much beyond that does it extend, and does it repeat itself? Do these dilation zones repeat themselves along the shear structure so that you get multiple pulses of this high-grade mineralization? They do intend to start a drill program in early March. They don't have to wait for the IP results because the holes that they drilled only went 100 meters deep vertically. So these types of systems, they have considerable grade continuity, down dip, down plunge. So they certainly will be stepping back and drilling deeper holes targeting 150, 250 meters. And it's quite likely that stepping a little bit to the southwest and to the northeast of the zone, that also makes sense because the focus for the drilling was basically guided by what happened to be outcropping. The surrounding area is covered by swamp and overburden. So the whole exploration strategy homed in on this area, demonstrated the model that or helped them figure out what the model is for this. They drilled it to confirm it. Now we're at the stage of can we demonstrate that this isn't just a localized thing with maybe a couple 100,000 ounces, but we're dealing with a multi-million ounce high-grade system. Much of the surrounding area is now staked and held by juniors. The area play juniors haven't received any bump in the market yet because the market still wants to see the size of this. And so the question is, who is this investor that stepped up? And they bought just under 2.5 million shares. Well, obviously, to get all the super flow-through benefits, they need to be resident in Quebec. To be strategic, well, it has to be somebody whose presence makes a significant difference down the road for the company. And Jean-Marc would not tell me who it was, but he did admit that no, it was not the Osisco Group. So that pretty much narrows it down to producers that have a base, an operation in Quebec that requires requires flow through benefits to reduce the taxes from the mining operations, and ones that come to mind are Newmont, which inherited the Eleanor mine from Goldcorp. Then there's Agnico Eagle, and then Yamana, which owns the Malartic mine. So these are ones that conceivably have a need for flow-through benefits, and the question is, which of those is the smartest to recognize the implications of the Pat 1 discovery, even though its footprint is still small? The whole geological context and what has been developed is that this could be something very substantial. And I don't know who it is, but I would say it's the smartest one in that bunch, and I'll leave it to the audience to guess which company it is that now owns less than 10% and is still remaining in the wings, but is regarded as a strategic investor by Azimut.
We'll have more with John Kaiser right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with John Kaiser. John, last week you introduced a junior to Discovery Watch that already had an emergent discovery. Do you have another such junior we should be watching?
Jim, the one I'd like to introduce today is Galway Metals and its Clarence Stream project in New Brunswick. It's located in the southwestern corner of New Brunswick, sort of halfway between St. John and Fredericton. It's a 65-kilometer by sort of roughly 25-kilometer land package, a substantial land package. It's actually an old story that is now being given a real shot at amounting to something. Now, just some background on Galway Metals. It is one of the two companies spun out in late 2012 from Galway Resources, which is a company run by Robert Hinchcliffe, Larry Strauss, and Mike Sutton. They had the California project in Colombia, which was not far from the La Bodega project of Ventana Gold, which Ike Batista bought for $1.4 billion in 2011. In 2012, he did a friendly bid for Galway Resources, around $300 million worth of cash, plus Galway Gold with another Colombian project called Vetus, and then Galway Resources with the Victorio Moly Tungsten project in New Mexico. These were all spun out on a one-for-one basis. Galway Metals, was listed early 2013, quickly did a 3-for-1 rollback. I've had it as a bottom fish for a number of years. It became the target of a notorious cash stalker who got up to 10% or so and tried to get control of the company. Hinchcliffe was able to beat that back. The paper was sold to another cash stalker, but right around that time in mid-2016, Larry and Mike and Robert finally decided on what to acquire. They dumped the Victorio project because tungsten and moly prices were so weak. So first they acquired the Clarence Stream Gold Project from Wolfton and another company called Rockport for about $5 million cash. And then they also acquired the Estrades project from a whole group of different owners, and this is in the Casa Berardi district in the western part of former mine. It's a polymetallic VMS play, and they put a fair bit of money into that since acquiring it. But the Clarence Stream is purely a gold play. It's an intrusion-related gold system, and it wasn't discovered until about 2000. Now, in 1992, the Canadian Geological Survey published a regional stream sediment survey database, and there was a prospector, Reginald Cox, who looked at this and spent the subsequent years traipsing around in the area and finally found some outcropping quartz veins in what became the Clarence Stream project. And Mac Watts Free West optioned 100% of that in late 99, and over the next decade, they drilled 50,000 meters of holes, established a resource. It had high-grade mineralization, but they only had about 400,000 ounces. Free West got taken over by Cliff Swartz chromite deposit, the Black Thor in the McFowles Lake region, and then that project sort of died. They'd optioned up to 65% to another company called Rockport, which spent $3 million to earn 30%, but then they ran out of money as the bear market got worse and worse. And then Wolfton Resources, which is Ewan Downey's company, it purchased the whole Clarence Stream project from Cliffs for about $3.6 million. Don Hoy, who was the exploration VP for Free West and worked on the Clarence Stream, he came in there, but they only let him work on this for another year before they got distracted by the VMS potential of New Brunswick and in Manitoba. And today, of course, their primary focus is Pickett Mountain, the VMS deposit in Maine. So they sold this, basically got a bunch of their money back that they put into this to Galway Metals. And since Galway Metals took it on in 2017, they've done some additional drilling on the north and south zones. They lowered the grade somewhat to make most of it open pittable, and they come up with about 667,000 ounces at just over 2 grams per ton. But then they, in late 2017, they said, okay, we can't just keep, re-drilling the same thing. They had consolidated a much larger land position. They moved down to the Jubilee zone, which another junior had found during that decade while Free West was exploring Clarence Stream. And while doing that, they discovered the George Murphy zone, which is 2 kilometers to the northeast of the Jubilee zone. And also in the following year, they found the Richard zone, which is right in the middle. So they've been using a single rig each year, going in there, poking away. They haven't produced a new resource estimate for these new zones. But late last year, they finally decided to get serious about the whole thing. They raised some additional flow-through money. They've always kept the treasury in pretty good shape, $6 million heading into 2020. And this year, they now have 3 rigs on the project with a 25,000-meter drill program. And the first step is to stitch together these 3 zones that are basically 2 kilometers apart with the Richard right at the 1 kilometer mark in the middle. Put this together, see if they can deliver a resource estimate for these 3 zones by the third quarter of this year that pushes the global resource over 1 million ounces of decent grade open pittable gold to show the market that the Clarence Stream area is a gold district and not just one of these places where there's these small, 300,000-400,000 ounce deposits that aren't really worth doing much on. And when you look at the geochemical database for this project, there's been over 50,000 samples collected by the different groups, and it's all plotted up. And in conjunction with the government till data that has also been developed, there's one big 25-kilometer fault, the Sawyer Fault, which sort of runs in a northeast-southwest direction. And the zones seem to be related to it, but they're not really related to this fault. This is not like Great Bear's LP fault, which is seen as a sort of a deep-seated crustal scale fault, and the splays and that coming off of it, similar to the Destor Porcupine belt with the Timmins and Kirkland Lake districts, and that's what all the excitement with Great Bear is all about, drilling on all these splays that come off the edges of this major fault. This is different because the gold mineralization is associated with intrusions that have come up and brought the gold with them and mineralized these structures surrounding them. The geometry is not super simple, so you got to do a considerable amount of work. It does deliver a lot of high grades, and so it looks very impressive. But what the market hasn't really realized is they've been only focusing on these relatively small portion of this entire district. The geochem suggests that away from this Sawyer fault, there are other areas of even more gold potential that has yet to be properly explored. So I think this is the year that this company takes this project, shows that there's million ounce of 2 gram per ton potential available for open pit development, gets the critical mass that attracts more deep-pocketed investors, and raises that 10 to 20 million bucks needed to hit this project very hard on a broad basis, similar to what we're seeing now happen at Great Bear. And it's not as sexy as Abitibi Greenstone Belt. It's more of the Appalachian Mountains, which are younger. It's similar to Valentine Lake, which also labored for years without getting any market respect, and now has a lot of market respect. It's the same sort of geology as the Moose River project group in Nova Scotia of Atlantic Gold that St. Barbara bought for $600 million. And it's also same geology as the Carolina Slate Belt, where Ramarco's Haley project is in production. So this is a segment of this whole geological trend that has seen relatively little exploration. There's evidence that it's a major district with multi-million ounce potential, and this company already has this emerging discovery that they're building bigger and hopefully turning into a base to hit the broader property really hard and make other multiple discoveries. And that's why, in a sense, this is very similar to the company I introduced last year, Osino Resources, which doesn't yet have the initial maiden resource estimate, but it's also the same thing where you're looking for relatively near-surface mineralization, and much of it's obscured, so you have to be clever about where it is that you target your drilling. So Galway Metals and its Clarence Stream project is a new Discovery Watch story to watch.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated.